So you did it. You worked hard, you saved up, and now you're sitting on your first $10,000. That's a huge milestone. But now what? The big question, right? Well, let's build a clear, simple plan to put that money to work for you, starting right now.
Does this sound familiar? You hit this major savings goal, which is awesome, but then the next step just feels overwhelming. There's so much noise out there, so much advice, it's easy to get stuck in analysis paralysis and just do nothing.
I gotta tell you, you are definitely not alone in feeling that way. But the good news, it really doesn't have to be that complicated. Our goal here is simple. Let's build a straightforward, long-term plan that you can actually put into action in the next 5 minutes.
Okay, let's dive into this first. Because to really get the strategy, we have to understand the unique financial world millennials are living in. It is absolutely not the same world our parents were investing in. This chart, wow, it tells a pretty powerful story, doesn't it? Just look at those numbers. Millennials are on track to have a net worth of around $173,000. That's way lower than Gen X and the baby boomers at a similar age. And look, this isn't a story about not working hard enough. It's a story about facing a totally different economic reality.
And here's what that reality looks like. We're talking about massive student loan debt, getting our start during huge economic downturns. It all adds up. It's made a lot of us a bit more cautious with our money. But you know what? These challenges also create a huge opportunity for a smarter, more disciplined way to build wealth.
All right, let's get to the bedrock of any solid investment strategy. These aren't some secret Wall Street tricks. They're the time-tested principles that just flat out work no matter what the market is doing. First up, compounding. Seriously, this is the engine of wealth creation. Think of it like a snowball rolling downhill. It's where your money starts making its own money. Starting now with this 10 grand is how you get that snowball rolling. In investing, time is your most powerful asset, period. Next, diversification. You've heard this a million times. Don't put all your eggs in one basket. And it's true. By spreading your money across different things like stocks, bonds, and real estate, you build a portfolio that's way more resilient. It's your financial safety net.
And finally, we need to talk about fees. They seem so small, but trust me, they are the silent killer of your investment returns. Just look at this difference, $3 a year versus $150. It doesn't sound like a lot, but as you're about to see, that tiny little difference can turn into a massive gap over time.
Yeah, let that number sink in for a second. 36%. Over 30 years, that seemingly small fee could eat up over a third of your potential earnings. It's insane. Choosing low-cost funds is probably the easiest win you'll ever get in investing.
Okay, let's get into the fun stuff, the actual blueprint. We've talked about the why, so now let's get to the what. This is a super practical way to put your $10,000 to work.
Here we go. A classic medium risk portfolio. The bulk of it, 70%, is in stocks, both US and international. That's your engine for long-term growth. Then we add 20% in bonds for stability, to smooth out the bumps, and 10% in real estate for some extra diversification. It's a really solid, balanced approach.
And here's the best part. You can build this entire portfolio so easily using what are called low-cost ETFs. Just think of an ETF as a basket that holds hundreds or even thousands of different stocks or bonds. So when you buy just one share of something like VTI, you instantly own a tiny piece of nearly 4,000 US companies. It is instant diversification in a single click.
So, how do you actually turn this plan into reality? Let's break it down into 5 super simple steps. It is way easier than you probably think.
No, seriously, that's it. That's the whole process. You can do all of this from your couch in less than an hour. And that second step, opening a Roth IRA, that's a huge move because it means all your money can grow and you can pull it out in retirement completely tax-free. And automating your dividends just puts that whole compounding thing on autopilot.
Now for what might just be the most important piece of this whole puzzle. Look, the tools and the plan are easy. The hard part, that's mastering the mindset to actually stick with it for the long haul. At the end of the day, how you behave as an investor is way more important than picking the perfect stock. The keys are so simple. Check in once a year, ignore the scary headlines, and just trust the process. Success here comes from discipline, not from being a genius.
If you only take one single thing away from all of this, let it be this. The market will go up and it will go down. That's just what it does. Your job isn't to predict it, it's just to hang on for the ride. History shows us time and time again that the people who stay the course are the ones who get rewarded.
By taking that $10,000 and putting it to work with a simple, diversified, low-cost plan, you're not just investing in the stock market. You are making a powerful, powerful investment in yourself and your future. It's a long game, for sure, but starting today is exactly how you win.